Fear is a trader's worst enemy. If you have fear, you will not do well. Just listen to any athlete. It is about being in the moment, blocking out fear. Athletes' failure is on par with traders' failure, yet there is success and you can have it too. But you need to control your fear. Most traders can intuitively understand almost immediately about the fear of failure. No one likes to fail, yet in trading it is a real thing. 70% of retail traders lose money each calendar month. Having worked at a Forex broker, I can attest to that statistic. There are various reasons for losing and having a heightened fear of failure as a result, but it does not stop you from being outside of that 70% each month. For one, you need to have an aptitude to trade. Let's face it, there are some who just don't have the ability. Not all of us can sing. I write the songs that make the whole world sing. Not all of us can trade. Is trading in your wheelhouse of things in life you can do, enjoy, or have a passion for? If it is, your fear of failure can ratchet down. The second reason for losing and therefore having fear of failure is trading takes practice and learning, and many traders just don't do a lot of each. There are a lot of nuances that need to be understood to be a profitable trader. If you don't feel comfortable with the trading platform, if you don't have the time to understand the nuances of the market, like listening to these self-help videos or reading Forex Live, if you listen to a video of mine or read a post from Adam or Justin or Eamon and say, huh? More times than not, you need to practice more. Now, you don't need to know it all, but you do need to practice and learn, and you will get better. Absent that, and you will have a heightened fear and not do well. The third reason that traders tend to have fear of failure is that they do not define risk and limit risk. If fear is your worst enemy, understanding your risk is your trader's best friend. Understanding risk will instantaneously lessen the fear of failure. What is best is if you define risk using a tool that defines a bullish or bearish bias and use that bias to control whether you buy or sell. Once in the trade, if the price action tilts the bias from bullish if you're long to bearish, or from bearish to bullish if you're short, then you just get out. Otherwise, stay in. It's the good old KISS principle, keep it simple to be successful. The fourth reason for fear of failure is not having a consistent trading plan. Honestly, market price action is somewhat random. A trading plan can be as simple as buy on the second bar after a fail below the 100 bar moving average. Define the risk as a move below or back below the 100-hour moving average by 10 pips or so. Define a target, and if it gets above that target, manage your profit and stop loss. Now, that simple plan involves aptitude. It requires some practice or monitoring of the past to give some confidence. It requires a risk-defining element and trade management. After you do that, it is about following the plan and executing the plan in a consistent fashion. Even so, it is still reliant on the market doing what you think it should do. It's random in that respect. Not all trades are going to be profitable. Nevertheless, all of that should ease your fear of failure. So these are some of the simple ways that you can lessen your fear of failure and trade with a clearer mind, which is always a good thing. In my next video, I will talk about the fear of success. What's that? Fear of success too? You bet. My name is Greg Michalowski. Please like or not like, comment, and follow us on YouTube so you can practice, practice, practice. Good fortune with your trading.